Hello everyone, welcome once again to the 100 most important topics which is brought to you on Drishti YouTube channel, and this is for your prelims 2026, and this is one more video with regard to your economics topic. So today, what are the topics which we are going to discuss? Today we are going to focus on the fiscal policy. That is, we will be focusing on government budget, its components, the types and everything. And also we'll be dealing with the deficit part of the budget. Now the first thing which I want to say here is that the word fiscal policy. Now this is a word which is very, very important for all of you. That is the word fiscal policy. Now when I say fiscal policy, in economics, this word fiscal policy, it's nothing else but it's a policy which is related to the estimated receipts and the estimated expenditure of the government. I'm using the word estimated. Or you can simply put it like the policy which deals with the receipts and expenditure of the government, that is referred as the fiscal policy. Now fiscal policy, actually it's expressed in terms of what? Budget. Always remember, the fiscal policy, it's expressed through the budget. And this word budget is a very popular word, but you won't be seeing the word budget ever used in the Constitution of India. Rather, what does this word budget actually mean? The word budget actually means a leather bag. The word budget, its actual meaning is nothing else but it's a leather bag. And when I say that Indian Constitution does not use the word budget, rather, what does it use? In Article 112 of the Constitution, we can find that there is a word written as annual financial statement. So this Article 112 of the Constitution, it talks about the annual financial statement. But when we talk about the fiscal policy, in other terms, it's also referred as the budgetary policy. Like the monetary policy when we were talking about, whether it was the quantitative tools or whether it was the qualitative tools. These were the tools which were actually applied by the central bank, that is the RBI. So the monetary policies, they are under the RBI guidelines. But when I say fiscal policy, then this is something, the policy which the government takes, and it is through its budget. Whatever policy, whatever steps the government is going to take, it is through its step. That is the policies taken by the government, the budgetary policies, that is referred as the fiscal policy. Now when I say the word budget, I say it like the budgets, they are not only being prepared by the central government, rather they are also prepared by the various state governments also. We all know about it. And do you know that the first budget in India, it was presented in the year 1860. 1860 was the year when the first budget was presented. And it was presented by James Wilson. So I'm not talking about a budget of independent India, but the first ever budget presented in India was in 1860, that is James Wilson. But what about the first budget of independent India? The first budget of independent India, it was presented in 1947. Remember it, November 1947. And the person was R.K. Shanmugam Shetty. I can be wrong with my spelling, don't worry about that. But it's R.K. Shanmugam Shetty. He was the first person, matlab he was the person who actually, you can say, presented the budget of independent India. That is November 1947. Now, all of you remember that the budget in India, it's basically presented in the first working days of the month of February. Recently, you saw that 1st of February, the budget was presented by our very own respected Finance Minister, Nirmala Sitharamanji. But earlier, the budgets were presented in the last working days of the month of February. This happened before 2017. That means before 2017, the budget was presented in the last working days of the month of February. But after that, nowadays, it is presented in the first working days of the month of February. Now, when I'm saying 2017, then 2017, one change which was brought, which was with regard to the date of presenting the budget. And I'm talking about the budget which is there with regard to the country. Okay, so we are talking about the general budget. I'm not talking specifically about any state budgets, but I'm talking about a general budget. Now, before 2017, the budgets, they were presented in the last working days of February, and now in the first working days. And also, after 2017, there were two changes which were made in 2017. All of you must remember that. In 2017, the railway budget, it was merged with the general budget. Before 2017, the railway budget and the general budget, they were presented differently. But in 2017, the railway budget and the general budget, they were both merged together. And this merger, it was the recommendation of Vivek Debroy committee. Remember it. It was the recommendation of which committee? Vivek Debroy committee. Okay. And then the second thing was that the distinction, earlier there was a distinction made between planned and non-planned expenditure. That distinction between planned and non-planned expenditure, that was abolished. Now, why it was abolished? Because whatever expenditure was incurred with regard to planned expenditure, it was to be completed for the 5-year plans. And we all know that the 12th 5-year plan, it was the last 5-year plan which was there. And after that, the 5-year plan has discontinued, and it is now the Niti Aayog which makes. So that's why the distinction between planned and non-planned expenditure, that has been abolished. So this 2017 saw two changes: merger of the general budget with the railway budget, Vivek Debroy committee's recommendation, and the second, the planned and non-planned expenditure distinction, that was abolished. Got it? Now, what is the time the budget is being presented? All of you must know that it's 11 a.m. And when the budget is presented, it starts with the speech which is delivered by the Finance Minister of the Union of India. So the Finance Minister gives a speech with regard to the budget. Now, why I'm talking about the speech? I'm talking about the speech because the budget speech in itself has two main parts. You must remember, there are two main parts in the budget. Number one, part A, it is the general announcement, and that general announcement, it is related to the economy. That means part A of the budget is with regard to the general announcement related to the economy that are made. And part B is announcement of tax related changes. So there are two parts in the budget speech. One, it is with regard to the announcements related to economy, and the second one is with regard to the announcements of taxes. Okay, so there are two parts in the budget. Now, when I am talking about the budget, then the document which is presented in the parliament, it is presented by the finance minister. Budget document, it's presented by the finance minister. Now, how many documents are there? There are 3 documents. I said you the speech has 2 parts, and the document which is presented by the finance minister with regard to the budget in the parliament, it has 3 documents. The first document, it is the annual financial statement. Remember it. What it is? Annual financial statement. And what is this annual financial statement having in it? It consists of the estimated receipts and estimated expenditure of the government. That is what is annual financial statement. Estimated receipts and estimated expenditure of the government. That is, when I am talking about the estimated receipts and estimated expenditure, then the government in this particular document is trying to provide data with regard to 3 years. Remember it, with regard to how many years? 3 years. Number 1, it is the current financial year. And when I am talking about the current financial year, then here the budget estimates and the revised estimates. Current financial year, budget estimates and the revised estimates. Then the second one is with regard to the previous financial year. The previous financial year is with regard to the actual figures. And the last one, it is with regard to the next financial year. That is the coming financial year. And there also the budget estimates are presented. So that means the first document is annual financial statement. In that annual financial statement, data with regard to 3 years are presented. Current financial year, in which budget estimates and revised estimates are presented. Second, previous financial year, in which the actual figures are presented. And the third one is the next financial year, in which the budget estimates are presented. So this is the first document. The second document is with regard to the financial bill. The financial bill is something which is related to taxes or changes in the taxes or introduction of new taxes and something like that. So everything with regard to the taxes, that is with regard to the financial bill. That is the second document. And the third document is the appropriation bill. What is that? It is the appropriation bill. That means, what is this appropriation bill? The government cannot take a single penny out of the Consolidated Fund of India. You all know about it, Consolidated Fund. So the government cannot take out a single penny from the Consolidated Fund of India unless and until it gets the appropriation bill passed in the parliament. So appropriation bill is nothing else but it is the permission related to the expenditure which the government is trying to do. For it, it has to pass that appropriation bill. So these are the 3 documents which the finance minister presents in the parliament along with the speech. Now, what about the economic survey? We all read that economic survey. But do you know that the economic survey, it is presented in the parliament a day before the presentation of the budget. This is for the newcomers who are preparing for the first time for the UPSC Prelims. You should know this, that the economic survey, it's always presented one day before the budget is presented by the finance minister. And this economic survey, it is being prepared by the chief economic advisor. Now there is a surprise question for all of you. Now, who is the chief economic advisor? Who is the chief economic advisor? The current chief economic advisor, you should know about it. And who was the chief economic advisor before him? So both the names, you can write it on the comment box. And I want all of you to reply for this chief economic advisor's name and also the person who was earlier the economic advisor before the current chief economic advisor came to the office. Before him, who was the chief economic advisor? So both the answers should be written in the comment box. So till this episode gets over, this lecture gets over, I want to see each and every one of you replying to this one. Okay? So your time starts now and I'll be going ahead with the topic. So what I was telling, the economic survey, it has been presented by whom? By the chief economic advisor. Now, all the documents related to the budget. When I say economic survey prepared by chief economic advisor. Now, all the documents related to the budget, they are prepared by whom? They are prepared by a department, and that is the Department of Economic Affairs. So there is a Department of Economic Affairs, and that Department for Economic Affairs prepares all the documents related to the budget. Now, you should also know for your prelims that how many departments are there in the finance ministry. All of you should know about it. There are 6 departments in the finance ministry. Let me tell you the names one by one. 6 departments in the finance ministry. Number 1, the revenue department. Number 2, the expenditure department. Number 3, the Department of Financial Services. Number 4, the Department of Economic Affairs. Number 5, the Department of Investment and Public Asset Management. Again, I am telling, Department of Investment and Public Asset Management. And the last department is the Department of Public Enterprises. This is the latest to be included, remember it. So that there are 6 departments which are there in the finance ministry. All of you got to know that. Now, next thing, as I said you, there is a budget. All of you know about it. There is a what? There is a government budget. Now, this government budget, as I said you, it is nothing else but it is the estimated receipts and estimated expenditure of the government in the current fiscal year. Now, when I say fiscal year, then this word fiscal year, it is related to a term called as budgetary year. So always remember, fiscal year is also referred as what? Budgetary year. They both are the same. So this government budget, it is estimated receipts and estimated expenditure. इसका मतलब there are 2 components of government budget. One is the budget receipts and the other one is the budget expenditure. One is the budget receipts and the other one is the budget expenditure. Now, whenever I say receipts, remember it, I am using a trick here. Whenever I say receipts and expenditure, there are 2 things which have to be looked into. One is the liability. Liability in the sense, the burden. In very simple terms, if I am paying 1,000 rupees to a person, then the other person has a liability that he has to return back the principal amount along with the interest. That is what is the liability. So liability is basically the burden, and this burden I am talking about with regard to the central government. So there is a liability which the central government, either the liability will increase or the liability will decrease. So there is one thing. And the second one is the asset. And when I am saying asset, then here 2 types of assets are there, physical and financial. When I say physical asset, The very simple example of physical asset is, for example, the house which you have. That is your physical asset. But what about the financial asset? The financial assets are the assets in the form of bonds, shares and all. So those are the financial assets. So why I'm using these two terms, liability and asset? Because if you understand their role, you will easily be able to differentiate between receipts and expenditure, because either of them play a very important role. Now, let me give you a very simple example. When it comes to receipts, the government does not only earn money from taxes, or it does not only earn money from the non-taxes. Non-taxes means if I am applying for a passport, I pay a 50 rupees fees to the government. If I am making a license, I pay 150 rupees fee to the government. There are government institutions which are taking fees. So they are basically tax and non-tax. But apart from that, the government can also receive money when, for example, if it can do borrowings. Like for example, the government can do borrowings from the IMF, or the government can do borrowings from other sources, other private parties. So when the government does borrowing, that is a receipt for the government. What is that? That is a receipt for the government. But that receipt of the government, it actually creates liability. What it does? It actually creates liability. So always with assets, liability creates. That means there is creation of liability. Because whenever the government will do borrowings, then the liabilities will what happen? Create. Why? Because the government has to return back the principal amount along with interest to the IMF or to the lender. Got it? So when we talk about liability, when it comes to the receipt part, the government is receiving the money. The government is pumping in the money in its pockets, but that pumping in of money leads to creation of liability. But what happens if the government returns back that money? For example, the government return back $1 billion along with interest to the IMF. Then that returning back of $1 billion to the IMF is what? It is an expenditure because it is going out. It's an expenditure. Why? Because it's coming out of the pocket of the government. And with that expenditure, what happens? The liability is what? Reduces liability. Got it? So with expenditure, the liability is reducing. I gave you a very simple example. And with receipts, the liabilities are what? Creating. Got it? Now, let's come to the asset part. Let me give you a simple example with regard to asset. Air India was being owned, managed and everything done by the government. And what happened? There was a disinvestment with regard to Air India. All of you know about disinvestment. It's opposite to investment. Investment is what? When you put in capital. But disinvestment is what? When you sell a part of the public sector enterprises or the whole of the public sector enterprises. Now, 100% disinvestment the government did with regard to Air India. Before doing 100% disinvestment, what did the government claim? Okay, Air India is mine. I am the owner of Air India. I am the one who's managing Air India. That was what the government used to say. The Maharaja used to always sit in that Air India. Okay, but what about after disinvestment? Who bought it? It's the Tatas who bought it. Now, whatever money they gave, for example, let me tell you 2,000 crores they gave. I'm just giving you a approx figure, 2,000 crore for the Air India deal. Now, what did that 2,000 crore mean? It means a receipt for the government. The government with that disinvestment got 2,000 crore in its pockets. But with that receipt, now can the government today claim that the Maharaja is the government's Maharaja? Not at all. That Maharaja has now become the Maharaja of the Tatas. So that means that 2,000 crore came into the government's pocket, but with that the government's assets reduced. So reduction of assets. Got it? Reduction of assets. Clear? So whenever there is disinvestment, the government is going to get the money, but with that disinvestment, what will happen? There will be reduction of assets. In the same way, if the government had given loans to the 28 states of India, all the states were given 1 crore rupees loan. So what did the government claim? Okay, in the market I have 28 crore rupees loan. In the market I have 28 crore as the financial asset because I have given 28 crore loans. And for that loans, the government used to get interest yearly. So that was also an income for the government. But when the government recovers those 28 crores, it says that, come on, give me back my 28 crores. Then what is that? The government is getting the money in its pocket, but its financial asset is what? Reduced. Now the government cannot shout and say that I have a 28 crore rupees in the market as I am the lender of 28 crore rupees. So that is what. So here the receipts, the liability creates, or remember it, both things cannot happen simultaneously. Either liability will be creating or the assets will be reducing. And what about with regard to the budget expenditure? Now, for example, the government has planned to construct, plan to establish 10 new aims all over India. How much? 10 new aims all over India. Now, establishing 10 new aims, it involves what? Expenditure. Every new aims has 100 crore to be invested. So 10 new aims means 1000 crores. So 1000 crores is the expenditure of the government. But with that expenditure, now the government has an asset of what? 10 new aims hospital. So here creation of assets. Clear? So budget, government budget is always divided into budget receipts and budget expenditure. Now the budget receipt part is always that either creates liability or reduction of assets, and here in the budget expenditure there is reduction of liability or creation of assets. That is what you people have to remember. Now let's ask, now like for example I said you, okay, there is what? There is budget receipts. What is there? There is budget receipts. Now most of the books, what I'll do is that I always try to bring a simple thing. Because what happens is that when we try to complicate things, then everything will be complicated. So I'll go by, not by the book norms. Everywhere what you will see is that, okay, budget receipts, दो type का budget receipts. One is the revenue receipts and the other one is the capital receipts. I'm not going to do that. When I'm saying budget receipts, then here it's nothing else but what? It is the estimated receipts which the government is going to receive from various sources. Estimated receipts which the government is going to receive from various sources during the fiscal year. Okay, from various sources. Now this budget receipt, I said you, in budget receipts what happened? The liabilities create or reduction of assets. Because this is the basic thing. If you remember this, liabilities create, assets reduce, everything will be clear to you. Now what I do is that I differentiate budget receipts into two parts. One is the revenue receipts. What is that? One is the revenue receipts and the other one is the capital receipts. एक क्या है? Revenue receipt and the other one is what? The capital receipt. Now remember, I am going to use these things. Revenue receipts, what happened? Neither creates liability nor reduces assets. That means what I'm trying to focus here, कि those receipts by which the government is receiving money, but those receipts, they are neither. So there is a word used, neither and nor. So neither there is creation of liability, that means the government does not have any liability, does not have any burden to pay back it, nor there is reduction of assets. Assets is also not reducing. Now think, the best example is the tax. Whether it is the direct tax or the indirect tax. I'm not going to go into the depth of the type of taxes and all, because we will be having a new episode for the taxes. So when I say the revenue receipts, then the sources. The sources are what? Two sources. One is the tax and the other one is what? Non-tax. Tax revenue receipts and non-tax revenue receipts. Now why I say tax revenue receipts are a part of revenue receipts, yet why tax, whether direct or indirect, is a part of revenue receipts? Take for example, I am paying the government 1 crore rupees as income tax. Sorry, I am not paying it. I don't have that much of income. It's just an estimation which I am saying. Suppose I pay 1 crore rupees as income tax to the government. Now, does the government has a liability? Ki, okay, Mr. Venkatesh, you have paid 1 crore as the tax. Come on, we are going to build a statue of Mr. Venkatesh in Mukherjee Nagar or somewhere in Delhi. No, there is no liability. I have to pay the tax. It is my duty to pay the tax, and the tax is being levied by the government. It's a legal thing. So I have to pay the tax. But my paying tax or anybody's paying tax to the government does not have any liability, whether to return back the tax or to do any favor with regard to the tax. So any type of tax is a part of what? Revenue receipt. Anybody, they will ask you why tax is a revenue receipt. You can say it neither creates liability nor it reduces assets for the government. Got it? Now, what about non-tax? It's not only that from the tax the government receives money. When I say non-tax, there are various sources from where the government can receive money with regard to non-tax. Number one is with regard to the fees and fine which we pay to the government. We all know that the government takes nominal administrative fees from us. I gave you the example of the Aadhaar card. I gave you the example of passport which the government makes for us. For that it takes a nominal 10 rupees, 20 rupees, anything. Or the parking fees which the government is taking, or the university fees, central universities, they take the fees. So these, you are filling the UPSC forms, you are giving a nominal fees of 10 rupees, 20 rupees like that. So what is that? That is the fees which the government takes. But if I go against the law, if I break the rules, the government is going to do a challan on me. That challan is nothing else, that is a fine which the government receives. So from fees and fine is one of the non-tax. Number two, the government has entrepreneurships. The government has business units from the profit which the government receives. So the profit received by the government, that is also a non-tax. Plus the interest received by the government. The government can also be the lender. Every time the government cannot be the borrower. The government can be a lender also. So when the government becomes the lender, then the interest which the government is receiving, it's a what? It's a revenue receipt. That too a non-tax revenue receipt. In the same way, the government might have invested in the shares and all. So what the government will receive as a shareholder, the government will receive the dividends. So the various investment incomes like the profit which the government is receiving, the interest which the government is receiving, and the dividends which the government is receiving. But here, one very important word I'll say you. There is a word called special assessment. There is a word called special assessment. Now, what is this special assessment? For example, I'm giving you, let me give you an example, you will easily be able to understand it. Now, special assessment is what? Like, for example, the government has done certain developmental activity. And because of that developmental activity, what happens is that your property value increases 4 times. So what the government now says is that, okay, this development was by me and your property value has increased 5 times. So what you do is that you pay a special assessment fee to me. That is what is special assessment. That means, for example, in front of your home, there is a metro station which has been constructed. Now, because of the coming of the metro station, your home, which was of 1 crore, now its value has gone to 5 crores. So why the value went to 5 crores? Because of the metro station. So now the government says that that metro station I have constructed and the benefit is for you. You are taking the benefit. Your value has gone up. So please share some benefit with me. So that is with regard to the special assessment. That is also a non-tax revenue receipt. One more is very important, and that is escheats. Do you know what is escheats? I'll give you a very Hindi name to it. Hindi name is Benami properties. That means those properties which does not have any legal hire. So whose property becomes? It becomes the property of the government. Automatically the property will be owned by the government because the property does not have any legal hire. So when it does not have any legal hire, then it becomes a Benami property, and that Benami property becomes the property of the government. Okay, that means the temples in Kerala, one of the, I am forgetting the name of the temple. There was a lot of sonas, a lot of gold, silver being found from inside the temple. Then what happened? The government said that, okay, all of this is mine. There is nowhere written that this is for this person, this person. There is no property hire here. So everything is mine. So it goes to the RBI bank. It goes with the RBI. Okay, so that is what. So there are non-tax revenue receipts. That is those receipts which are other than tax. But the government is receiving money, fees and fine, profit received by the government, interest received by the government, dividend received by the government, escheat, special assessment, and also gifts and donations and aids which are received by the government. Gifts, donations, aid in the sense any foreign country gives aid to you, any World Bank gives aid to you. That is a part of what? Non-tax revenue receipt. But what is the similarity between all of this, whether tax, whether non-tax? There is one similarity, that is they all lie under the revenue receipts. So when I say revenue receipts, you should remember it is equal to tax plus non-tax revenue receipt. And what is one more thing? That neither it is creating liability nor it is leading to reduction of assets. I think it's very loud and clear to all of you. Next thing is that we are going with the capital receipts. Now capital receipts may, here neither and nor were used. Here either creates liability or reduces assets. So here there is either creating liability or reducing asset. Got it? Dekho, most of the books, most of the teachers will say, okay, receipt, revenue receipt, and let's talk about the other receipt. But here, when I'm talking about receipts, so one is revenue receipts and the capital receipts. So what they will do is that they will talk about revenue receipts and revenue expenditure, capital receipts and capital expenditure. I'm not going into that format. I am going into very traditional way, very simple way of teaching. That is, please remember, this is one of the components of the budget, that is budget receipts. That budget receipts gets further divided into revenue receipts. That revenue receipts further gets divided into tax and non-tax. But there is one similarity, that is neither create assets nor reduces liability. What about the capital receipts? The capital receipts, they will either create liability or they will reduce your assets. I gave you example of the borrowings. I gave you the example of the disinvestment of Air India. They all will come under here. So for your simplicity, what I'll do is that I will divide the capital receipts into two parts. One is the debt creating capital receipts. One is what? Debt creating capital receipts. And the other one is non-debt creating capital receipts. One is the debt creating capital receipts and the other one is the non-debt creating capital receipts. When I say debt, debt means what? Debt means the borrowings. And debt means what? When you take borrowings, for that you have to pay interest. And when you are not able to pay the interest, again you take a loan. So that debt, it can lead to you what? Debt trap. You know na, a coin has two sides, heads and tail. In the same way, debt, it can be positive, the debt can be negative. In your NCERT books, it has been explained, class 10th NCERT book, money chapter. Debt can be positive, debt can be negative. Debt can be positive when an entrepreneur takes debt, delivers the goods, and what happens? Receives the profit and pays back the debt. So what happens? That debt was good for him because that debt helped him to do the production, go for the profit and have a lot of sale and profit and all, everything. But debt, the same debt, it can be what? Negative. When does it get negative? When you take a debt, basically it happens with the farmers. When you take a debt and you are not able to do the production, somehow the production gets collapsed. So what happens? That debt, for that you have to pay the interest. Now again, for that interest you don't have money. So what you will do? Either you will sell your asset or you will keep something as collateral and you will again take a loan. So that debt, instead of giving you a relief, it has added more troubles to you. So it results to what? Debt trap. So debt can be positive, debt can be negative. So here, when I am saying debt creating capital receipts, it means these are those capital receipts which actually creates liability for the government. And one of it is the borrowings. One of it is the borrowings. That is, the government can do borrowings. It can do borrowings from the government, from the state government. It can do borrowings from the RBI. It can do borrowings from the world banks. It can do borrowings from foreign countries. It can do borrowings from private sectors. Okay. So the government, when it does borrowings, then that borrowings creates liabilities for the government. But that borrowings add money to the pocket of the government. So that's why it is referred as capital receipts. But capital receipts, what happened? It is creating liability for the government. So it is under debt creating. In the same way, one more I can say, that is small savings. We all know as household, we do small savings with the government. Even the firms, they do small savings with the government. All of you know that there is a money market where savings are there, where the companies, they invest money with the government. Now we as households, where we do savings? Do you remember M1, M2, M3, M4? The bank was, even the post office was a bank for me. What did I do in the post office? I did small savings in the post office. In the sense, the post office savings which I did. Now for that post office savings, I'm just giving an example. The government has a liability that after maturity, the government has to pay back me the loan, the principal amount with interest. So that is what is, so that means debt creating capital receipts is equal to these two things. And what about the non-debt creating capital receipts? The non-debt creating capital receipts is recovery of loans, and the second one is disinvestment. Okay, so the receipts part is clear. So this capital receipts further gets divided into debt creating and non-debt. Why this is under non-debt? Because these also add money to the pocket of the government. That means the government is receiving the money. But with this receipts, the government assets are reduced. Nothing is happening to the liability, but the government assets are reduced. So that's why capital receipts either create liability or lead to reduction of assets. Now, did I say with receipts, there is always creation of liability or reduction of assets. Now, what happens with expenditure? Everything changes. Here with liability, the word reduction is used. With assets, the word creation is used. Let me give you a very simple thing. Now, what is this? This is budget expenditure. Now I said you after 2017, the plan, non-plan expenditure has been abolished. So we are not going to discuss about that plan, non-plan expenditure and all. Only two type of expenditures we are going to discuss. That is, one, it is the revenue expenditure, and the other one, it is the capital expenditure. Now please remember, when I am saying expenditure, then the liability reduces or assets, what happened? Creates. So when I am saying revenue expenditure, then this revenue expenditure is for day-to-day functioning of the government. That means whatever is the regular expenditure of the government, which the government cannot escape from, that is referred as revenue expenditure. Now let me give you an example of revenue expenditure. The salaries which the government pays to its employee, or the interest which the government has to pay for the loan which it has taken, or the subsidies which the government is giving to the people, these all are, or the pension which the government is giving to the retired government personals. These all are what? These all are nothing else but it is revenue expenditure, which the government has to do. The government cannot escape from these expenditures. It cannot escape. It has to do it. It is the moral duty of the government to do it. So that is what is revenue expenditure. So in revenue expenditure, what happens? Again, because it is revenue, the word neither will come. Neither reduces liability, okay, nor creates assets. That means the government liability is also not reduced, nor the assets are created. Let me give you a very simple example. Now, when I say that the government does 3% of its GDP as expenditure towards education, what did I say? 3% of its GDP as an expenditure towards education. Now, the government says, oh, I am doing 3% expenditure on education. Come on, everyone, clap hands. Will we clap? No, not at all. I as an individual, I as a citizen of India, I will say, oh, hello, it is your moral duty to spend money on education. It is your moral duty to spend money on health. It is your moral duty to spend money on the defense for the security of the country. So when the government spends money on education, on health, on defense, so these are something which we talk as a whole the government is spending. So that is the moral duty. If my parents have spent money on my education, it was their moral duty. If I am spending money on my child's education, it is my moral duty. But now if I buy a very good table, a very revolving chair, and also a very good, table lamp for my child, ki come on, you have this table, you have this chair, you have this lamp, with this you do your studies, then what is that? That is something which is asset building. That means when the government does expenditure on education, that is revenue expenditure, because it's neither reducing liability nor creating assets. But if the government spends money on building schools, colleges throughout the country, on building roads, railways, airports, on buying fighter jets, Rafale and all, the government is spending money. What is that? That is capital expenditure, because in capital expenditure what happens? Either reduces liability or creates assets. So these all are basically asset creating things. And liability, how it can be reduced? When I am repaying my borrowings, when I pay back my borrowings, that is reduction of liability. The government can be a lender, am I right? So as a lender, when the government lends money, I gave you an example, 28 states, the government lended money, 1 crore each. So the government was what? The government created its financial asset. So here, the liabilities are reduced and the assets can be created, whether physical asset or financial assets, they can be created. But here, there is no such thing. And I gave you a very simple example with regard to all of this. Clear, everyone? Okay. So this is the type, like I said you, budget receipts, revenue and capital receipts. Then that revenue and capital gets divided into tax and non-tax, and then that capital gets divided into debt creating and non-debt creating. Then we have the budget expenditure, that is the revenue expenditure and capital expenditure. That revenue expenditure is something where the government has to do it, the government cannot escape from do it. And when we talk about capital expenditure, then it is something with regard to the developmental work which the government is doing. For that, the government can create assets, okay? So it can create assets or it can reduce liabilities. So this is all which is there. And now quickly, let's see what is written here. So what is a budget? It's nothing else but it is a financial document through which the government estimates the income expenditure of the upcoming financial year, and distribution, redistribution, regulation of economic resources by the government. And then we said, what is that budgetary process? The budget is presented by the finance minister. Then there is a general discussion on the budget in both the houses. As the speech of the finance minister finishes, there is a general discussion which starts. Then after the general discussion, like 2 to 3 days, the general discussion takes place. Then the budget is sent to the standing committees. We all know there are 24 standing committees where the budget is being sent. Those 24 standing committees, they scrutinize each and everything with regard to the budget. Also, they scrutinize the demand for grants which are there in that. Then after that, what happens? A detailed discussion takes place. That means the standing committee, it reports the budget, reports everything to the parliament. In the parliament, then there is the discussion which is taking place on each and every demand for grants, and each and every demand for grants, they are discussed, they are voted on, and then the appropriation and the finance bill is passed. So this is the process. You will be studying about it in polity part, so I won't be going into the detail about that. Then what is the objective of the budget? You should know that. Balanced allocation of resources. One of the thing that whatever are the resources, they are scarce. So the scarce resource, they should be distributed in a balanced manner. That is allocation of resources in a balanced manner. And also ensuring economic stability and reduction in economic inequality and encouraging GDP growth. So these are some of the objectives with regard to the budget. Types of budget, you all must know about it. I'm not going into the reading of the types. The general budget, you should know what is a general budget. That means the annual budget which is presented by the central government, which talks about the revenue as well as the expenditure of the government. So that is what is general budget. Performance budget, that is something which is related to the execution of departmental work. That means whatever is the departmental work, and with regard to that, the execution of the departmental work. Then there is the outcome budget. All should know this outcome budget. It is also referred as the result budget. Okay, outcome budget, it's also referred as the result budget. It was implemented 2005 and it was adopted in 2006. That means, implemented in 2006, and it was adopted in 2005. So 2005 it was adopted and 2006 it was implemented. Outcome is something with regard to the link between the input and the output. So what is the link between the input and the output? That is with regard to the outcome. And then comes the zero-based budget. This is very, very important. Zero-based budget. Now this zero-based budget is nothing else but from the scratch every year you have to start. That means you're not basing your budget in the previous year. From the scratch. Scratch means what? हम बोलते हैं ना, zero से start करना है हर चीज को. Start your preparation from the scratch. That means from the zero. Don't go by your previous knowledge. Start from the zero thing. So that is what is zero budget. Okay? And then comes the balanced budget. That means the total income of the government should be equal to the total expenditure. And this demonstrates what is the fiscal discipline and stability with regard to that. Then there is the gender budget, very, very important. The gender budget, it was adopted in 2005, and it is with regard to improving the economic status of the women. So that means it is something with regard to the women-centric schemes and also with regard to promoting gender equality. Okay, so this is what is with regard to the gender budget and all. There are other budgets also, like single budget, where all departments and programs, a single budget for all the department and program. Now this is prevalent in Britain and America. Then there is polymer or multiple budget. Multiple budget, that is separate budget for each department, which is there for in France and Switzerland. Then item based budget, that means the amount for each item is sanctioned, but the details they are not given. And freedom to departments in case of reorganization. Okay, that is vote on account similar budget. So that is item based budget. Then there is an interim budget. Interim budget means there is a provisional budget which is presented under special circumstances. That is, it is presented during the Lok Sabha elections. Like for example, the Lok Sabha elections were going to take place. So before that, the elections, it would take place somewhere in March, April. So before that, what happens? There is an interim budget which has been presented. Okay? And the Parliament's permission for only essential expenditure by the government. So this is what. And components, I did explain you about the components and all. And please remember, Chief Economic Advisor, I said you should all tell me the name of the Chief Economic Advisor. And I can find that there are students who have written the names. So now check your answer. Is the answer is right or not? The Chief Economic Advisor currently is V. Anant Nageshwaran. He's V. Anant Nageshwaran. Okay, got it? Chalo, very good everyone. And I also asked one more thing here. There was a twist in the question, that whom did he succeed? That means who was the Chief Economic Advisor before V. Anant Nageshwaran? He succeeded K. Subramaniam. Remember it? He succeeded K. Subramaniam. So in the next video, what we are going to do is that, because of some shortage of time, the next video we are going to again devote some more time for the budget, where we will be talking about the deficit, FRBM Act, and more with regard to the budget. Thank you all, and please, a request to all of you that share this video as much as you can. Let everyone who is appearing for the Prelims 2026 get a view of this video. And also, please subscribe. If you're not subscribed the channel, that is Drishti IAS English channel, you're not subscribed, then please subscribe for the channel, because many new things are going to come which will be very helpful for your Prelims 2026. And thank you all. Take care of yourself and do your hard work, because hard work will always pay you.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.